What is going on? We have a trade recap today, August 28th. It is a Monday, a marvelous Monday. Actually, it was a red Monday for me, down $80. So I want to recap today's trades. I want to say it was not a good day. Market really wasn't great in terms of action, momentum-wise, and it kind of got bored. And I don't want this to come across like, oh, like you only lost $80, like it's not bad. Like it actually probably it could have been worse, but there's a couple things that I have done over the past couple of weeks and months to put things in place to minimize the potential negatives that I could get myself up into. So let's cover that. You can see behind us, month is red. We have been pretty much red since we started to like adopt the current sizing, which essentially is $100 risk a trade, and we're looking to make 100 plus. You can see that we actually have none of those multiples in this day. That's because as trades potentially work in my favor or against me, I will move the stop because there will be a new invalidation point based off of my strategy and what has happened and what I'm looking for. So that's what I'll do. And sometimes it's good, sometimes it's bad, but generally speaking, those things are more so risk management protocols that get put into place that minimize downside. They could limit upside. So that's something that I let the data decide for me. We started the day off with Meta calls, and then we had Amazon puts, Tesla puts, and NVIDIA calls. It's kind of back and forth, but that's kind of the deal. I mean, if we look at SPY, I'll go to SPY first. We'll look at SPY, and then we'll kind of go from there. So here's I'm going to go to the daily on SPY. So here's the deal. Honestly, what I should be thinking here is I should be saying, hey, I don't want to mess with SPY. I shouldn't even be trading, to be honest, in this box. Now that I'm looking at this bigger picture, shouldn't even be. We get back above here, we like longs. We start to push down towards here, we like shorts, right? But in the middle, it's just screw zone. And that's just the potential that you have, right? So you got to be aware of that. Doesn't mean you can't trade, but I have to just take that into consideration. And I probably should have done a better job of thinking about that today. So first things first, we took Meta. Bigger picture charts, Meta is kind of wonky until it gets over $300. Kind of the same deal. I don't love the longs, but this morning, it was the strongest stock at the time. And so once it set up with a nice resistance clean at around 289.60, and we broke that, I wanted to get in. Now, I didn't actually get in until above 290, which is actually on this candle, which is why this trade didn't end up working. I was actually up, I want to say $80 at one point at the peak of this candle. But the trade didn't work because I didn't actually get in on the true break. I got in a little bit after the break because I was waiting to see if this 290 kind of psychological level, a lot of sellers stacking up there. I was watching Bookmap, and like that was a key spot. Once that broke, I felt confident or more confident. The trade kind of worked. This massive upper wick was probably telling at the time when it sold off. And so once I saw that, I moved my stop loss up a bit, which is why this trade only lost $50 versus my usual stop loss of 100. So that was the deal there. I also played September 15th contracts for most of everything here, except the NVIDIA, which I'll show you in a second. And that is honestly proving to be a limiting factor, I think. So what I mean by that is the time expiration, right? Like going out 2-3 weeks, it definitely saves you on theta decay and stuff. But when you're playing momentum, in the grand scheme, it really shouldn't matter. So unless you're playing same day, I think the way that I'm going to go about this now, I just thought this, half hour ago, and I'm going to say it out loud now. I think I shouldn't be going out like 3 weeks, because if I'm looking at a 5-minute break up or down, right, that move in the next 10, 20, 30 minutes, like that's what I'm looking for, right? I'm not looking at the next 2 hours. It could be if we get a massive trend. Yeah, it could be that, that ends up happening sometimes in a more momentum directional market, So I'm thinking out loud that I think what I'm going to do is I'm going to start playing just the next week, no matter what. So if it's a Monday, I'm playing next Friday. And then when we get to Friday, I'm playing next Friday. We get to the next Monday, I'm playing the next Friday. Just go to the next week. So it's like, this way it keeps it super simple. It's the same every day. I don't have to think. I know what expiration I'm playing. And there will be enough volatility there, most likely, for this to work if we get a nice move, like that meta trade. So that's the idea. Then I was watching, okay, meta breaks down, starts to sell off, market starts to pull back a little bit more. SPY was drilling down towards new low of the day, I believe, at the time. Amazon was the weakest stock, and it still is it still is the weakest stock on my list of 10 right now. In Amazon, I ended up playing a breakdown underneath these lows right here, and then we had a double bottom. And so when that double bottom broke, that's when I got in. It looked good. 30-minute chart, 1-hour charts looked really good. Looked nice. Looked like a good setup. Amazon's been a downtrend for the past couple of weeks, but just no follow through. Lots of buyers and wicks coming in here. Still weak, but like choppy, no follow through. So stopped out once it popped back up. Just moved on. Then went for Tesla, and Tesla worked better. You can see this is the trade on Tesla, a breakdown underneath the low of the day. Then we had this kind of consolidation flag for a move down. We got a decent chunk of the move, but as it started to kind of come back on me, I moved my stop loss, which is why the Tesla trade only made 22 bucks. And I sized down. So here's another piece to the puzzle. If you were to go back to last week, this is the day. On Friday, down 303. This is what is called a max loss day for me, because I risk about $100 per trade. Now, it's not perfect. This first trade lost way more than I should have, but I risk about $100 on a trade. And then my ideal reward is I'm looking for 100 plus, right? Is when I'm looking to take profits into that move, unless I move a stop loss up to minimize my backside, as there is now a new invalidation point if it's taking a while to play out. That's simply how I'm going to do it, or how I do it. But 300 is too much, because what I find is that I end up taking a lot of stupid trade. I took stupid trades on that specific day, but I find myself on a day where I hit max loss, there's a pretty good chance that it's not 3 setups that make sense and that worked. It's not 3 of those that lose. It's usually 1 or 2 that lose, and then it's like the third one is like, well, I'm going to try this, and then lose again. So the plan is to now go $200 or 2 trade loss. We have to size down for the third, and the third only comes if the setup is there. And so this is something that you have to kind of get a hold of yourself, at least in my case, have to get a hold of yourself to say, like, will you respect this? Will you follow this? And as long as you do that, and looking back, when you can think about it clearly, this is going to help you net. So that's the plan. So we have 2 losses in a row. We must size down. And then if we hit a third loss, we can only lose 50 on that one. So our max loss day should be 250. Now, this, as I build more data, if I determine that this is actually terrible and I'm losing the third time more often than not, then I will say, okay, if we have 2 losses in a row, we quit for the day. So our max loss is 200. But right now I'm going to call it 250. Give that a couple of weeks, couple of months. It's not going to happen every day, hopefully, right? And see how it plays out and see what the data tells me off of that. And so that's the deal. This NVDA was actually not system, but this is on like 250 bucks. So I went with like a quarter size on this one. And that was the deal. Really, to be honest, I'm not happy with, like, I shouldn't have done this. I'm not like proud of this one. Oh, it worked out. No, I really shouldn't have done this one. Why? Here it is. So I played the break of this pre-market high. We didn't really have a clean consolidation into that high. We just had higher lows, and I put a stop loss here. Let me see. I entered on the break here. I put a stop loss here and put a take profit on the contracts $3. I got in at like 260, and I made, what is that? 40 bucks in the play. That's it. Just a pre-market high break, which also happens to line up with the mornings or the open highs, which are like right here. So that's why I thought it was valid. But I kept the stop tight, and I wasn't going to lose more than like 20, 30 bucks on that trade. So not happy with like it was kind of what it is a boredom. It was a boredom day. It was a boredom trade. Like that wasn't needed, but I was bored. I saw it look good, and I was like, oh, let's just play it with a quarter size. And honestly, like I shouldn't be doing that. Like I really shouldn't be doing that. But in this case, it worked. And yeah, so that's the plan going forward. We'll see how the next couple of weeks go. I'm gonna have a trade recap for the month of August in probably by like Thursday or Friday, and then yeah, I'll be back at it. As we hit September, and hopefully we get some better momentum. The market just hasn't been very, momentum filled, it feels like, as of late. Because, we talked about this before, like even in this move down, this move down was like a choppy move down. Then we had some momentum to the downside for like a couple of days, and then it's bounced back, and now it's like it's just chopping. It does, honestly, man, this looks like it wants to go higher. I don't know. Looks like it wants to go higher. But for now, we're in this range. Inside of this range, you have to just proceed with caution. As we get down towards the lower end of the range and below it, momentum to the downside. And as we get to the top end and above, better probabilities of momentum to the upside on trades. So we'll see what happens. That's the trade recap for today. Lost $80, but not bad, but not good. Definitely a day that I could have and would have in the past lost more. But some backstops and some things you learn about yourself. And again, this is why I think it's really cool, because you can't copy what I do. Like, you can't copy my strategy perfectly. You can't copy my risk management style perfectly, right? Even if it was like, if it looked amazing, right? No one could replicate that, because there's things that I think differently than you, and you're going to think differently than me, which is why I think it's pretty cool at the end of the day. But that said, thanks so much for watching. Any links, resources to TradeZella to track all this stuff, anything else, I'll leave it down below like usual in the description box. I'll see you guys in the next one. Peace.